All right, traders, it is 9:30 right now. The opening bell just opened on the Eastern time frame. So, well, I'm on the Eastern side, so that's what time it currently is. As you can see, the market is reacting. Let's actually see what it's doing on the charts. Let me share my other trade. We're gonna go ahead and close. We're gonna go ahead and close Bloomberg and YouTube out. You guys can pull that up on your own side if you choose to. So currently the market hit that previous low and it pushed down. And like all this stuff makes sense. You know what I'm saying? Like it all makes sense, like how the market is reacting currently. It broke out of a structure in this area. So it's pushing down, and a lot of people, because of how violent it reacts, they get chased out of the market. So it is at a level of resistance. What we don't want to see, we don't want to see it like continue to push down and break. But to me, this just looks like that the market is pushing down to retest in these areas. Yeah, to retest that previous high. It could dive deep, seeing where we came from. But it's like this is the kind of stuff that you got to plan for. You see this market react like that, everybody starts panicking and being like, "Oh man, the market is probably going against me." Say you were buying, well, I'm currently buying, and the market pulled back. But those are kind of things that I expect at this time, especially like nothing is guaranteed in this market, guys. But analyzing and annotating like where the market is currently at and what it's doing, like you can pretty much put yourself in a good position, you know what I'm saying, to catch the pullback, catch the re-entry. Like that's all that looks like to me. Then 10:30, 10 o'clock, probably boost up. But nothing is solidified until the market closes. I mean, until a candle closes. So once you have a candle close, like one thing about indices is that's why I like turning it to a line chart. It kind of takes the fear out of you seeing the market react so violently. And then again, you can kind of navigate and understand the structure. So that would have been a straight sell for like US 30, but I don't think that it's the overall move. I think the move was just a correction in order to keep pushing up. And most people react off of that. 9:30 is pretty violent, but it's not necessarily doing like going against the market or going against the trend. Currently, we're in consolidation, but I've been following US 30 since yesterday. Over here in this area, that was like the 12:30 candle yesterday or 11:30 candle. It retested it this morning around London, which kind of makes sense. If you pay attention to the market, you'll start noticing that the time frames like normally match, right? So for instance, at 5 o'clock when the market is closed, like Eastern time, right? At 5 o'clock p.m. when the market is closed and it's resetting to switch over to a different session, right? In that time frame, the market will go up or down. And this isn't, don't treat this as like concrete. Treat this as a possible guide. So if you recognize it, it's like, okay, I can use this information. So for instance, the market goes up, and I'm just talking right here as we're looking at US 30. So for instance, the market, opens up and buys at 5 o'clock, US 30, right? There's a possibility that 5 a.m. in the morning is where it might come to retest that same zone. So that same zone may be a buy opportunity for you if you're following me. So we've kind of just seen it. What time frame was that? We kind of see it play out almost, exactly alike with this time frame over here. So I told you it was like the 11:30 candle, and it's a better viewpoint looking at it on Trade Locker because it gives you the actual viewpoint of the broker versus like relying on, I'm using Oanda even though my broker is KOT. You see what I'm saying? Like I get an actual depiction, and I encourage everybody to use TradeLocker as TradingView. I mean, I already have my stuff set, and I actually graph on TradeLocker as well if you're using that. So over here it was like the 12:30. It says 11 right now because the time frame I'm on, but it's a 12:30. So if we come all the way over here, or let's say it is 11. So it's around that time frame. Look where this market retested last night. 23:45. If you don't know how to read military time, that's 11:45. So about 11:12, about the same area where this market pushed up from yesterday when the market when London closed, pushed up, and then it came back down when London opened. You see what I'm saying? It's like you follow that, especially like in the consolidate when the market is in this consolidation phase, and then you use that as opportunities to either re-enter or get out the market. You start paying attention to this stuff. There is a pattern. That's why there's an algorithm in the market, guys. Like there's a pattern that you can identify. That pattern will not be consistent, but when you identify the pattern, it puts you in better position to make accurate trades or make accurate moves within the market. You know what I'm saying? So look, US 30 currently, based off of the information that we already knew, like I said, 930 just looked like a retest. And the one thing that I use, even if you're not like, savvy on the market yet, we obviously want this thing to push away from us. But like, even if you're not like too savvy in the market yet, apply like the tools that you're learning. So for instance, the Fibonacci tool, right? Fibonacci tool, even if you're not familiar like 100% what it is, just have these parameters set. Maybe you don't have all these parameters, but you use like the 0, the 382, the 50%. Maybe you have a 75% and then 100. That's still enough information. So the reason why you even need this tool, or I would say it benefits you, maybe you don't need this tool, but it benefits you. Normally 50% is like if the market's buying or selling, that's the area like of a previous high or a previous low that is retesting, almost guaranteed. So at the very least, you want to see the market pull back to like 50%, right? Of a candle of an entire move. Understand that this candle on the smaller time frame is a trend, right? So when I match it up, so 930 just shot out. Most people were like, oh my gosh, if they got in on the wrong end. You know what I'm saying? Like, oh my gosh, 930, the market is selling because how violent it is. No, wait for it. If you're not in the trade yet, wait for it. Draw a Fibonacci tool to it. And as it comes down, you want to see what's the percentage of the previous candle that it's retesting if it's not violating the trade. Now, if you're in the wrong direction, you'll know pretty quick that you're in the wrong direction if you're in the trade. But the market would probably need to close like below this structure. Like this is structure right here, even these wicks, it would probably need to close below there, then pull back. But normally what you should expect early on, like when the New York session opens, is that the market will like pull back almost 100% of where it came from. 6 o'clock is normally, and this is like time frames that I'm giving you. But again, you have to identify an orientation to the pair that you're trading. It's not going to be flawless and it's not going to be as straightforward as I'm saying it. This is just stuff that I know personally because what I've identified within the market, right? So currently we're struggling. We're still struggling to push out, but 930 did almost retest almost 100%. The one thing that I like to see is when I draw a Fibonacci tool is that I like to see that the market not create a candle at 786, because sometimes that means that the trend is going to continue pushing that way. I like seeing moves like this where the market actually created like a wick and pushed away from 786, but then I want to see where it's going to close at. Yes, we pushed a wick, an entire wick, so it moved away from this market, from this area pretty fast. But what we want to do is identify where the close is at, because that's technically the structure. Now, close above, like if this market closes, how much time we have left? 45 minutes. We got 34 minutes left within this 45-minute candle. So anything can happen within that 45 minutes, right? But what we want to see is that does this market, because this is kind of like a shallow close or an aggressive, like buying it, it's saying it's at high momentum, right? But it has to push away from this market first. I would probably rather like to see the close, if possible, either at the 386 or the 236. I mean, a 238. That's supposed to be 238. Matter of fact, let me change that now. I don't know why I got 236 right there. 238. So if it closes here, I know the momentum is pretty high, especially from where the market moved this morning. But to kind of confirm, because if it closes up here, the possibility of it retesting to pull a candle down here, it could stay down here before it pushes away, if that makes sense. So something like this, say this candle closes as it is, it can give you the next candle up, and then it could wanna, it's on a higher time. Oh my gosh. I don't know why this is doing that to me. Hold on. Oh, because how I got it set up. And always scale back out so you can see what's going on. But these are just possibilities, like the market closing above here and then still wanting to push a candle down here to 50% just to clean that up. But this is the type of stuff that you want to see. The market push away from there aggressively. Like I said, the way it's like struggling to break that, it will probably push another candle on the opposite side to retest these zones and stuff, possibly. But the thing that we want to see is that, the market is buying up from these positions, which is good. So far, so good. You know what I'm saying? 930 just brought down some heavy volatility to pretty much push people out of their positions. But this is where you start identifying things that confirm your direction. You know what I'm saying? You won't know until more data is presented in the market, right? But as the market starts revealing more data, you can start identifying stuff that you learn to give you more confidence in your trade. Maybe to even see how long you even get to stay in your trade. You know what I'm saying? So right here, this is something that I like to see. This right here is a morning star. So that's a good sign right there already. If you don't know what a morning star pattern is a bullish pattern, and I'll box it up so you can see what it is. See how it's struggling? So what they'll probably do is push another candle on the opposite side after it like closes this candle currently. Sweeping out people that just entered, making them, it's going to throw confusion at you guys. Like, it's designed to do that. It's not clear cut. So even when you think that, oh man, the market is running away, like it's going to, manipulate you into believing the opposite. And again, it's until the candle closes. So we have a whole 30 minutes left before this candle closes. But this is the type of stuff that I would rather see instead of like it closing above there. I'd rather see like 238, 382. But this right here, if you can see that, where I have the black box, that's a morning star pattern. And morning star patterns are normally 50% of that candle or 100%. You see, it basically went 618 because it didn't touch 786. Basically went 618 as far as the momentum. But again, we want to see the close. So if we get a close on 238, 382, the market still has to push away. So by design, it normally opens up bearish if the momentum isn't strong. But here's another way to kind of confirm. You measure the momentum for that time frame, and that's changing it to a Hakanashi candle. So that's good right there that you're still seeing like bullish candles. Now Hakanashi, this is what you want to see. You want to see like how these candles are. You see how it has a flat bottom. You know, normally candles have wicks on both sides, but you see how it has like a flat bottom and the candle is pretty either medium or strong. You want to see that to kind of confirm the direction. So at least right here, that confirmed the direction. The market corrected itself. Even right here, that confirmed the direction. And you could say the same thing on the opposite side. But as you can see, like the market never like came below these points. Like the market never like tried to come, well, it attempted to come back down there, but it bounced off of that. Same thing. Never tried to come back here, you see? So just by looking at it, we can see that we're up currently. Even though this is consolidation, we can see that currently we're up in the market. You know what I'm saying? Hasn't tried to push down, even seeing that where we came from. Because you can see that, you know, like when you see moves like this on Hakanashi, you see how this bearish move is? That move should have continued if it was bearish, is what I'm saying. So if the market was still trying to push down, it should have continued. It shouldn't have like pushed up. And even if it did push up, it should have only corrected itself and then continue pushing down. So this is kind of giving us our ammo to say that, yes, the market is trying to continue to push up. We're currently at a previous level of support, which again, you can treat it as resistance. The market is going to react when it hits this. But if it breaks and close above, you'll have your retest, and then the market is going to continue up. I mean, that's just plain and simple and stuff. It doesn't look like that, you know, when we're looking at the market, but by design, like that's what it's supposed to do. So let's look at some other pairs. But that's what I'm looking at for US 30. I do want to see a break, really, of this candle right here, this funky looking candle right here. I want to see a break of that, a close above. And your best bet is to have an hour, just so you don't get played. You know what I'm saying? Like your best bet is to wait for it to close on an hour. So you see currently on the hour time frame, the only data we have, and it's about to close, is it's about to close in 12 minutes. The only data we have is this candle right here. So once this candle closes, we can then move our Fibonacci tool to orientate to where that candle is at. And then wait for the next candle to open up and show us like, you're not anticipating where it's going to go. You're collecting the data on how far it travels based off of this candle. So say this candle, it can push down, but it closes a candle below this, then yeah, that kind of spells trouble that US 30 is probably trying to either push down a little bit lower or reverse. But like I said, I don't think that's happening based off of the momentum. I think we're pretty much good because, again, all this stuff should have continued. And even right here, like, even if it is going to push down, more than likely what it's trying to do is be attracted to its range high. So from there, we'll kind of know if it's trying to continue to fall or continue to push up. So let's look at another pair, though, real quick. And that'll pretty much conclude. Well, let me show you guys the dollar first, because I do believe that the dollar is still bullish. I know it pushed down, and it pushed down back to that gap. Yeah. Pushed down back to that gap. Completing it 100%. So anytime you see a purple annotation on my charts, I'm annotating a gap. All my colors mean something. So if you're following along with me, you'll see that you identify this stuff, and hopefully you can use it yourself. I only get gaps that matter. You know, some pairs, such as like the dollar, is the DXY, so it's an index. You can trade this, but it's pretty costly to trade. I just use it as a guide for like other pairs, such as like GBP, USD, or even seeing what oil is doing. All right. So currently it's at the gap. It hasn't necessarily filled the gap. 1030 could continue bringing this thing down. But again, I still think that overall, I think that we're bullish. All right. Give me a second. So overall, I think that we're bullish. I know that the market, retested this area over here. Now, this was from 2022. You know what I'm saying? Where the dollar dropped and everybody was like, "We're going into," and I was like, "No, we're not." But we did, because if you look at, I didn't understand at that time that being below like a dollar flat, that means you're in a recession. And so we did go below a dollar. So we were like momentarily in a recession, but it wasn't enough for people to like be panicked like they were. Our fear was, were we going to be like we were in 2001, after 9/11 and stuff. So I don't think that's a cause for commotion and stuff. And as you can see, the dollar actually created strong levels of support on a weekly time frame. I know there's a lot going on my chart, so if you look at it, it created a support structure on the weekly time frame. Just follow along with me. Let's make that yellow, just so you can see it, and I'm gonna erase it. Not to mention, yeah, oh, I definitely messed that up. Oh, no. I don't know why I was trying to create a W. It was the fake M pattern. I mean, I guess you can. No, that's not a W. But anyway, that's what I thought that I was seeing. But it created support. That's what matters, right? And you see that the market did push away from here. So currently, this is the thing that I said that, and this is where the gap, this was a gap, right? So I was tracking the dollar based off of 2023, and then it sold again in 2024, and now it broke above those levels. So I said gap needs to be filled, sell entry, which it was. When it came back up here, that was a sell entry that I was looking for. It sold down. Now it broke above this entry. So what should we expect? We should expect for it to come somewhere down here, if not create support. Again, start where the market is currently at. Now, how is that information relevant? I don't think that the dollar selling, I do think that there's a possibility that it could drop a little bit lower, but the information is relevant because I can use it for pairs such as like GBP USD or Euro USD, things like that, right? Now I was looking at GU to sell off. That was my expectation. And it pushed a little bit higher. So we did get our sell off, but it did push a little bit higher, which is, hold on, give me a second. Uh, which is back to a previous resistance zone that I had. Now, the fact that it came to a resistance zone and it slightly broke above it, you can kind of expect that type of stuff. You know what I'm saying? But to me, this is still validating that the market is bearish unless it's pushing up a little bit higher. Now, I did have like other zones that I was expecting that the market was going to retrace to. And if you look, it kind of wicked up there. It kind of faked out. So when I gave the what was the call that I did? When I did the chart marking call, Yeah, when I did the chart marking call or a video on YouTube that I did, I think last week, I pretty much annotated these areas, these levels of resistance, right? So let's see. Man, I'm getting good at this. So if you look, I said that the market could possibly come up to these levels. This was the first, well, this was the first level of resistance or the ceiling or the roof, you know what I'm saying, of the current market. Because overall, what I was identifying is that what I was showing, first of all, was that, GBP USD has been bearish. And even when it came back up to these zones, which was like 50% of this entire market, if you look at just from this trending move right here, this trending move right here, the market came up. Let me change that. Yeah, that was right. So I go wick to wick. The market came up, look, 786 and pushed down. One, that was a sign right there, which that was a previous level of support, or it was a previous level of support that became resistance, right? Yeah, it's a previous level of support that became resistance, right? So currently, oh, I lost my track, right? So it's a previous level of support that became resistance, right? So currently it's below this level. Yeah, we're looking at the weekly when we did the. So yeah, currently it's below that level right here. And what our expectations is that once the market closes, that it should still continue down, but it could still touch this level. That's what I was trying to show you guys, though, that the dollar currently is like bearish. But I expect it to probably turn around from here. It could still continue to push down just slightly, but I expect it to turn around from here. You know what I'm saying? Just because the only level that I'm looking at for it to push down slightly to is down here to this level. But again, the market doesn't always follow our zones that we create. So I'm just going to wait for the market to show its hand, which if the dollar does start getting bullish from here, it should turn GBP USD bearish from that point. You'll see that. It might not be exact, but you'll see that. But this is why it's important to like have these parameters already set, have these things already annotated in the market. So when it comes to your levels, you're not, trying to create an analysis right then and there and be pretty much be behind or see something that you really don't see. So that's what I'm looking at for GBP USD. I'm looking at it for it to come down. Um, you know. from this area or wherever it decides to, again, we have 6 hours until this candle closes. But if we go to the 4-hour candle, this is why you scale out, scale in and then scale out, right? Yeah, what it might try to do is push up to this area. And again, this area is right above it, might push up to that zone, and then the market might decide to push down from here. And the other thing that I wanted to check was oil. So oil's still moving in the direction that I expected. I expect oil to continue moving bearish from here, but we'll just have to see, because the one thing that I annotated that I expected that the market was going to try to do is push down to this area over here. Push up to this area over here between like 75.13 and 73.55. So that's just an area that I don't know. It just kind of like, drew my attention to it, that the market may possibly push up to these levels and then from there sell off. But currently, like, the structure is sound. Again, identifying patterns, that's what's important in the market. Here's the thing. Overall, I'm looking at US oil to continue buying up overall, right? But because there's a gap over here that I didn't annotate. I left it there on purpose because I already have enough information. But just where this black box is at, you see there's no data right there. That's a gap in the market that you guys need to pay attention to. So overall, US oil should be trying to buy up. I just don't know how low it's trying to actually push down to. So that's something that you guys would have to figure out as far as like your entry point. That's all you would have to look at. What's your entry point within the market? Is the market, trending in that direction? And if so, just wait for your break of structure and then take advantage of the market from there. See what I'm saying? So that's pretty much it, guys. The market's set. I know US 30 did just make a push down. Let's see. Back to this gap that it came back to. Oh, that's that first level of structure that is trying to retest. So this is why it's important of annotating like what the market is currently doing, guys. So right now, like, US 30 is violently pushing down. Yeah, well, I'm gonna see what it does. I think it's just heading back to these levels right here, just to cause confusion in the market, but we'll see. Yeah, we'll see from here, man. I figured that it might try to hit that range low and then reject from there. So yeah, but that's pretty much it, guys. Just wait for the market to pretty much settle. 1030 hasn't approached yet. So once 1030 approaches, we'll kind of see what the market is trying to do. And then just go from there. But it's pretty much set on what the conditions are. The trends are still, relevant to what's going on. The only thing is that now US 30 is drowning people out. Glad I took my profit right there, but definitely just took me out on one of these positions. But again, we're still pushing up. You know what I'm saying? Like, we're still up. One thing that I think that the market is grabbing is just, sweeping people out. Here's an indicator that you can kind of establish that kind of tells you like the bank numbers. This is like the quarter level theory. So the fact that this market pushed down there, that kind of makes sense to me. We'll just see how far US 30 is just trying to go. But everything else is just pretty much solidified, guys. So, you know, make your money in this market. Don't make no reckless moves. If you're following me on YouTube, make sure you hit that like button, hit that comment. I mean, drop a comment for anything that you guys are trying to see. Not to mention, make sure you guys tap that subscribe button. I'll see you guys definitely on Discord tomorrow. I'll drop the group. And for everybody else on YouTube, I'll see you guys tomorrow at 8:30, yo. So appreciate you guys, Tom. Make a lot of money. Don't make indecisive moves in this market. And again, you can't prepare for some of this stuff, but that's why I said it's important on tracking what the market is currently doing at that time, so you're not caught with your pants down. You know what I'm saying? So yeah, everything's pretty much straight. Let me look at. Yeah, I like that. I like that move for GU. I'm actually going to jump on Discord, guys. If you're on my Discord, I'm going to jump on there for a few minutes, and I'll catch everybody tomorrow. All right.